Welcome to this video. This is Dr. Barry Burns, and today I'm going to show you stock market strategies that's around the candlestick patterns. This one is kind of unusual. I haven't seen a lot of people teach this, so hang on to your belts, fasten your seatbelts, and here we go. So a basic candlestick pattern that is often taught is the engulfing bars. Engulfing bar is a pretty simple concept. We've got a pattern here, and it's a two-bar pattern. And that is where this bar, the red bar, engulfs the bar before it. So it's generally a two-bar pattern, and it's a good one. It must be taken in the context of the entire chart and so forth. But basically what's going on here is you've got the low of this bar, they're about equal lows, and then this bar has a little higher high than the previous bar. But to me, the way I do it, and I do things a little heterodox sometimes, and for me, the most important part of the candlestick bars are the real bodies. That means the colored portion. So this is the open, and that's the close, and that's on a green bar. So we can get a green bar, the close is above the open. And on the red bar, the open is above the close. So therefore, what's happening is you've got energy that's basically coming up, and then the very next bar, that energy completely reverses. And the significant thing is that the second bar completely encaptures or engulfs the bar before it. So if you mark your highs and your lows, this bar is inside of that bar. So that means this bar is very strong. It's really a complete reversal of the energy of the bar that came right before it. Okay, that's your typical engulfing bar pattern. Some people now will use a little variations with the highs and the lows, or put more emphasis on the real bodies. I put more emphasis on the real bodies, as I said. Now, that's the basic pattern. Let me show you the variation that I want to share with you today. So the variation is when we have multiple bars being engulfed instead of just one bar being engulfed. So let's look at this bar right here, this red bar. If you go and you look, you could see that, yes, the real body, not the high, but the real body, again, that's the red section of the candlestick, engulfs the bar before it. But look at this. It also engulfs the bar before that, and the bar before that, and the bar before that. So that's the point today, is that this is engulfing the 1, 2, 3, 4 bars before it. And that's the pattern that we're looking for. Multi-bar engulfment. Multi-bar engulfment, as opposed to just a one-bar engulfment. So what this means is that the market has come up, and then it's gone sideways. It's just hesitating here. We get even a little doji bar there, narrow range, real bodies, which again indicate neutrality, hesitation. And then this bar, still not wide range. And then this one, finally, we're getting the market making a commitment saying, we reject all that stuff. We're getting out of this little consolidation period now, and the selling is really picking up. Another thing that's important about this is not only that it engulfs the previous bars, but that the engulfing bar is a rather wide range bar. So this does not work and does not apply if all the bars are narrow range, including the engulfing, because that really doesn't say that there's a lot of bearish or conversely bullish energy coming in on that bar. So there's got to be a wide range there showing that there's been a lot of, in this case, selling and price movement to break out of, it's kind of a little breakout type action here, to break out of this narrow range. All right, let's look at a couple more examples. Very simple concept. Okay, so now here we have another one. This one's very interesting because we actually get a regular two-bar engulfing pattern right here. And that's fine. That's not too bad. Might be a little nerve-wracking because we just had to move up there with a gap. But, the gap does close, and that's one thing that is common. However, the more interesting and more sophisticated pattern that we're looking at today is a multi-bar engulfing pattern. So we'll look at this bar right here. That's our next engulfing bar. Notice it does not occur on big volume. This bar occurred on big volume and the price didn't go anywhere. So again, those volume signals are not very reliable. So here's how this looks. Again, we're looking at the real bodies, and it engulfs the previous 1, 2, 3, 4 bars on the chart. So nice pattern. And again, the point is we're looking at primarily areas of price action that are at highs or lows, and where the market has a bit of consolidation, where it's just kind of going sideways. Minimum of 2 bars, obviously, but 3, 4, 5. Heck, I've seen them go 7 or 9 bars and being engulfed by the final bar. So we're looking for kind of neutral bar action, moving sideways, narrow range from high to low, and also narrow range between open and close. And then for 1 bar to put in a wide range and have a big movement from the open to the close of that bar, and showing some direction, some real thrust, some real push, some real commitment in the direction of that candlestick. Now, don't use this in isolation. Use this with the rest of your trading methodology, but it's really a powerful pattern. I love it. I use this. I trade these things all the time, and I have found them to be very, very reliable. So if you like this video and you're watching it on YouTube, please click on the thumbs up icon below, and I especially would cherish a comment from you. That encourages me a lot to create more free tutorials for you, which I really enjoy doing. Also, I'm giving away one of my free trade strategies. It's one of my favorites. It's called the rubber band trade. It has a very high win-loss ratio, and it's a simple strategy. You can learn it in 26 short minutes. Get the video explaining that trade strategy absolutely free by clicking on the image in the top left corner, or if you're on a mobile device, go ahead and click on the little eye with a circle around it in the top right corner of this video. And if you're not watching this on YouTube, there's probably a link or an opt-in form where you can click and go ahead and get access to that video as well. Once you do, I'll personally email the video and the trade strategy to you.